Guys, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the fate of this rally following Chair Powell's pivot in Jackson Hole. We'll ask the committee what to do in these markets right now. Joining me for the hour, Joe Terranova, Shannon Saccocia, Jim Lebenthal, Steve Weiss. Let's go check the markets. We did have that huge gain, as you know, on Friday. NASDAQ's up a bit right now. Dow's down 0.5%. S&P, for all intents and purposes, is flat. And the bulls, Joe, are out in full force. Post Powell. Morgan Stanley, the bull case seems intact. Highly encouraging September cut commentary is just the, quote, cherry on top of a late summer Sunday. Brian Belsky, this remains a bull market from both a cyclical and secular perspective. Jonathan Krinsky, who was even talking about the chances of a pullback as long as the S&P remains above 6,400, and that's where it is right now, above that. Put our cautious view on the back burner for now. Is that the best way to think about this market after what happened in Jackson Hole?
I think the setup going into Friday was perfect for the bulls. The setup in which volatility was spiking, advancing into the Jackson Hole speech. And in terms of positioning, it appeared as though you were having a sell-off, anticipating the potential that maybe Chairman Powell wouldn't deliver exactly what he did on Friday. So I think that little shakeout in positioning helped tremendously. I really think it's now about, for the remainder of the year, if you could carry forward the momentum that was created off of the chairman's speech in places like small caps, in the broadening out narrative, and even geographically going outside of the U.S., can you carry that momentum forward? And I expect that you can. Looking overseas, you see really strong performance in China. Here domestically, I know the tape today looks as if it's returning to where it was prior to Chairman Powell, but I think you take the other side of that. I think the broadening out thesis is something that has validity as we move towards the remainder of the year.
Jimmy, you were talking about 5 to 7% pullback in stocks, and you had been selling some things, taking some profits in anticipation of that view playing out. That was the wrong move.
So far, it has been the wrong move. I still haven't put that cash to work. I actually added to it, Scott, with the AMAT sale last week. In the long run, and I've been trying to hold these two thoughts visible and to our viewers at the same time, the two thoughts being, one, in the short term, we're entering September. We've had a heck of a rally. Yes, earnings estimates are going up, but we're trading around 22 times next year's earnings estimates. There's been a lot of good news that's come out. I mean, a lot of good news. I don't think Jackson Hole really could have gone any better.
Was there a lot of good news? I mean, we had Jackson Hole speech was, I guess, good news if you wanted a rate cut in September, but leading into Jackson Hole, there wasn't a lot of good news in a couple weeks prior.
Well,
we had hotter than expected inflation prints. People were saying, maybe we're going to take the cuts off the table now.
Scott, earnings came in much, much better than expected in the second quarter. And unlike the prior quarters, what you're not seeing this time is the third quarter estimates being taken down. No longer are people saying that we've just brought forward earnings from the future. The market now believes that earnings are going to grow. In fact, for next year, the earnings estimate is $301. And, that puts us just a hair under 22 times next year's earnings. And my point being is, I don't think that we can get a meaningful rally in the short term because you need earnings growth to come in better than expected. You're just not going to get any indication of that until late September at the earliest, which is pre-announcement season. Now, I do think that earnings are going to come in better than expected. But my point being is September is kind of a desert. I don't know what other good news can come in. Yes, maybe a China-U.S. trade deal, but we've still got at least 60 days on that. I don't think that's going to come in early.
Do you think the rate cut for September is now in the market? Fully?
85%. I think that there is room to be disappointed in that. I hope that I am not disappointed. I'm counting on it. But 85% chance in the Fed funds futures market of a cut in September leaves more room to the downside if, for instance, CPI, PPI next week, in 2 weeks, comes in hotter than expected. So all I'm saying is in the short term, I see a slight risk to the downside. I'm not rushing to put that money to work. In the long run, I think the budget bill is stimulative. I think tariffs paid for it. I think earnings continue to grow, and eventually the housing market starts to recover. There are things to look forward to in 2026, but you got a treacherous desert in September of this year.
The biggest risk, Weiss, was hawkish Powell, and you didn't get it. And that's why you have the bullish commentary that I read at the top of the program, along with Jefferies raising its S&P target to 6,600 for the year end. UBS looks at the same number for the year end, says you'll go to 6,800 by the middle of next year. That's not that much upside, but the idea is that I'm not reading any bearish notes today. I'm not reading really bearish notes from anybody. Because Powell might have saved the day for this rally in some minds on Wall Street.
Yeah, it's funny. I agree with you that there was a lot of bad news going into it. Earnings are always backward looking, and they were, and it was a great earnings season, better than I expected, But going forward, let me tell you what can be positive. The base case always September is, there's a sell-off. So what's the largest sell-off we typically see? On average, about 2%, but it's really much more modest than that. But the debate will now be, is it going to be 50 or is it going to be 25? So 25 being the base case, and that's what drove the market. I was surprised at the extent of the rally. But what I am concerned about, frankly, is to what is the point that you just made, which is everybody's on the same side of the trade. And the VIX is down at around 14, as Joe mentioned. So when everybody lines up on one side, that should give you some reason to be concerned. However, I'm like everybody else. I've stayed invested. I'm looking for opportunities to buy a little more. I'm looking at Dick's, for example, on the retail side. Been a long time since I've been there. Haven't bought it yet. And I think the market is positioned to go higher. It's discounted everything once, and then as with rates, which I do think it pulled forward, it discounted it again with the rally on Friday. So we're clearly in a bull market, and I'm staying long.
Well, I mean, there are two trades to be on one side or the other of. There's the markets going up trade. Ed Yardeni, he's sticking with his view 6,600, but he's not on the same side of the trade of the Fed going to cut in September, because he makes the point that they might not. And he says August CPI and employment reports might convince the FOMC to hold off on easing if they are hotter than expected, and we think likely. We're sticking with our associated targets for the S&P for both the end of this year and then at the end of next year, which is a higher number for certain. I guess I take from that to ask you, Shan, can all of this work? Those targets work? Can the bullish narrative work if the Fed does what Yardeni suspects it might, despite what Powell said in Jackson Hole and the perceived pivot that sent the market off to the races on Friday? Can the market still go up if the Fed does not cut?
The markets could go up, but it wouldn't be because of the broadening trade. We would get more of a concentration, Scott, once again, in growth, in technology, in parts of communication services. The broadening trade that exists, I do think, is predicated on this rate cut expectation for September, not because the companies need it necessarily, but because the sentiment is behind it that this justifies the...
Hang on 2 seconds. Let me go to the White House. Megan Casella has a news alert for us. What are we learning, Megan?
Hey, Scott. So the president is just wrapping up about an hour's worth of remarks with reporters in the Oval Office. And he was asked towards the end there about this Intel deal and the U.S. government taking about a 10% equity stake in Intel. He was asked whether it was hypocritical of him to look towards nationalizing a private company in this way, and whether this deal might present a model for a new way forward. Take a listen here to what he said.
Is this the new way of doing industrial policy?
Yeah, sure it is. I want to try and get as much as I can. Now, in the case of Intel, it was interesting, but I hope I'm going to have many more cases like it.
He hopes he's going to have many more cases like it. He went on to say much more about Intel, saying there will be other cases. If he has that opportunity again, he would do the same thing. And he said it's not a shame. It's called business. If somebody's willing to give you 10% of a company and you're not paying for it, he would do the same thing again. So very clearly saying there, Scott, very strong words from the president that he likes this idea of nationalizing these private companies, or at least taking a stake in them as the federal government, and that he will not hesitate to do it again. The only question now is just what sort of companies might come next. Scott.
Yeah, and how it's justified. If he or anybody else in the administration, frankly, feels a need to make a case-by-case justification. We'll see. Megan, thank you very much. Megan Cassell at the White House. We're going to kick this around because, Weiss, I want your take on this. This is a brave new world in the way that we may have to think and talk about free markets and the way they have operated for many, many, many decades, and the way that they may operate from here forward in the current administration, if not beyond.
Yeah, so look, to me, this is the wrong move. It does appear that was a hostage ransom, so to speak, with Intel, that the CEO gets to keep his job, and in turn, U.S. government is going to take 10%. Now, if you follow Trump's thinking through, even though Kevin Hassard said it today, that it's unlikely he does that, but there he goes, he's doing it, is that what's going to be next? Is he going to want to make it a successful investment and go after companies that aren't buying Intel products? So this is not what America is built on. This is not a free market. This is just the opposite. This is going back to where we saw Czechoslovakia was, lots of other, companies that were previously, run by dictatorships. This just shouldn't be. Republicans agree with that. Democrats agree with it. It's just the wrong thing. You don't know as an investor how to pick winners and losers in this case. So Intel already said, we will not sell anything to the government. So is there going to be a penalty? Because in order to get this going, Trump's going to have a penalty system. So this can only go one way, and that way is bad.
I mean, Jimmy, you've had people raise the issue of whether you can make a national security case out of the Intel specific example. And I think that's an absolute fair question. When you hear about this, the first thing I thought about was, I've covered activist investors for a long time, okay? Many of them take positions that are less than 10%, like right at that threshold, but yet they still have a loud voice and argue for change, buybacks, mergers, all sorts of stuff. That what precludes the administration from weighing in, whether it's Intel or another business in another industry, on what it should do with its corporate capital, what it thinks is best for shareholders now that it is one?
Let me embrace what you're asking and then talk about the risks of this specific policy. In embracing what you're saying, I will point out, and I think I did this a week or two ago, Scott, that the prior administration, different set of metrics, different set of driving forces, had requirements that it put on the CHIPS Act. Those were social requirements. I'm not here to judge them. I'm simply stating that the Biden administration, in exchange for the loans that were granted under the CHIPS Act, had various requirements about diversity in the workplace, child care, things like that. Again, not for me to judge. I'm simply saying that both administrations had requirements that came out of this. So I don't think it's necessarily new that the government is saying, I want something for this. But, and this is where Steve is, I totally agree with what Steve is saying. There are some unintended consequences that cannot be foreseen at this point in time.
Well, it's a slippery slope.
It's a slippery slope.
If nothing else.
It's a slippery slope.
Whether you agree that it's the right move or not, it's nonetheless a slippery slope.
And to your point, though, it's the same thing with an activist. There are always unintended consequences. In this case, though, Intel is developing these foundries. It doesn't have customers for it. Who's to say that the administration doesn't say to NVIDIA, look, additionally, in exchange for getting your China licenses, you've got to build your chips at Intel's foundries now that we have an ownership. That's just a hypothetical. That's part of the slippery slope.
So we have a sovereign wealth fund in the United States. I mean, basically, that is what we are implementing. And if you think about the semiconductor industry, and I'm not going to sit here and pontificate on whether I agree with it or disagree, but I'll tell you this much. I think Intel, if you're looking at the stock today to purchase it, you're feeling a lot better about buying it than you did 3 months ago, because the administration is going to be behind it. The administration doesn't want to see that stock price go back to $17, $18. And I think the entire semiconductor industry potentially will benefit from the fact that you're now going to have this government interaction with it. So I don't know. You look at it from the take of an investor and you say to yourself, do you want to invest alongside the government in these companies? Probably, yeah.
I mean, it's as far as I see it, it changes the calculus and the questions around what we have always believed to be a free market capitalist system. Now, some screamed to the heavens in the depths of the crisis when we rescued certain companies and let others fail that were either on the brink of insolvency or we felt like there was a chance that they were going to go there if something dramatic didn't happen. Now, Intel doesn't appear to be in that specific predicament, but doesn't it change the way we discuss what we thought free market capitalism once meant or not?
Well, the justification that was later used is that the U.S. government did pretty darn well on those financial services investments that it made during the great financial crisis. But I would say, Scott, the challenge here is, I think what Jim and Steve have voiced is, what does this mean for other competitors in this space? I mean, Joe, I would question whether this would be something that would benefit all of those companies, because it actually could create a different competitive landscape for those that perhaps are not receiving that government backing. And so I would look to other sectors, perhaps like healthcare, Scott, where we could potentially see a spillover effect from this type of announcement.
Hey, Scott, if I could just put one more point in. This is not a sovereign wealth fund. Sovereign wealth funds invest like any other manager. This is a targeted approach at Intel. Now, I have no issue. When we had all the grants from the CHIPS Act, why give them for free? We shouldn't have influenced how they run their company. We should have influenced it with DEI and the others. But the companies always have the option of not taking the money. Now, when we granted, we should have taken, the Biden administration should have taken passive stakes in the company. Now, you could say, okay, why passive? They're putting money in. Why passive is to preserve the capitalist system. So there's nothing that the government could do in terms of their expertise in helping Intel build a better business. But they can influence the customers, and that's what I'm concerned about.
All right. You want to finish your point? What point were you making? Wait. I know we're going to move on because I want to get back to the markets because I got a lot to get to.
Yeah, the last point I'll make is, look, if you want to dismiss that it's not a sovereign wealth fund, that's fine. But in practice, it's acting in a very similar capacity where you see the government basically investing in domestic companies. And that's something that we see around the world. And it's probably coming to the United States. The administration has made clear that that's their actual intention.
All right. So it's an interesting story. A lot of interest around it. There's no doubt about that. And we'll see what other developments we get, if any. We thank Megan Casella for bringing us the latest from the White House. We were on the topic of what happens in this market post-Powell and the pivot that he made in Jackson Hole. The so-called broadening trade, as we've discussed on this desk already, was the biggest beneficiary of all the talk going in to late last week. And if I show you what the gainers have been leading into that, you will see exactly what I'm talking about. Because the small caps have ripped, the home builders have ripped, the airlines, the banks, especially regional banks, healthcare, biotech, the equal weight S&P finally wakes up a little bit. And then Roth Capital today says being too short the underweight sectors of this market is now the largest risk. Truist upgrades small caps. Calvacina, RBC, says they may have more room to run as well. Jimmy, what do we think?
I think I look in my portfolio where I have a lot of names that, frankly, were not performing well in 2023 and 2024, and I like what I'm seeing. And these are non-technology names. Yes, I do like to tease Joe about Wynn Resorts setting a new
52-week high today.
Yeah, I mean, the highest since I've owned it, and there's clear momentum there. And think about what that is. That's a discretionary stock. That's like that's the antithesis of if we're worried about the economy. This is where people go to spend the most discretionary of their dollars. You mentioned airlines. Airlines are really having a nice little run here. They were kind of left for dead after the Liberation Day announcement. Small caps have a lot of room to recover here, a lot of room. Same with the RSP. I just like what I'm seeing. I like it. It makes sense to me. It's something that I've called for quite some time, as the odds of a recession over the months and quarters have just done nothing but recede.
I don't see how you can like what you see and be so positive about a broadening trade, while at the same time suggesting you wouldn't put any money into the market right now because you still think we could get a pullback maybe, but a nothing.
I think the pullback's going to be temporary.
Until next earnings season.
We're talking about 1 month. And by the way, Scott, if I'm wrong, I will come out and I will say I was wrong, and I'll put that money to work at higher prices than today. But I do think that there will be point-specific companies that have whatever sort of hiccup over the next month, whether it's market-related or specific to earnings announcements that they may or may not make. I'm happy having the dry powder with the market overall trading at 20 22 times. Where I really have not taken money from, though, Scott, is some of these laggards that are not catching up, that are now catching up. You haven't heard me talk at all about trimming Wynn, or Cleveland Cliffs, which is finally showing some life here, or Delta. I mean, these are things I just want to let these ones run. What have I trimmed from? I've trimmed from Oracle. I've trimmed from JP Morgan, things that have done exceedingly well. AMAT I took out because it's just a terrible underperformer.
Cleveland Cliffs, by the way, is down 8.5% in a month. If that's showing life, we better get out the defibrillator.
Wait a second. It's up year to date. We just 2 days ago we were talking about
11. I was out, thank God.
I think when you're looking at this.
No, it was last week. You were in. You were giving me props. The whole world said, wait a second. What is it, opposite
1
day?
day's worth of props. 1 day's worth. I know it feels like a lifetime's worth to you, but it was 1 day.
Come on, Jimmy. You don't get more than 24 hours. I think when you look at this list, though, you have to think about where's sentiment and where's positioning, because that's really going to drive where the momentum goes for the remainder of the year. And looking through this, look, small caps, without question, I think sentiment is as bearish and as skeptical as you can find relative to maybe banks or home builders or even healthcare. There's very large skepticism that small caps can begin to build the type of momentum that will allow it to have some form of a cyclical bull trend.
Do we have a new amount of skepticism around the AI trade, since we're talking about that and since we're going to get NVIDIA this week? No, I feel like there's more questions lately being asked about CapEx bubble. Yeah. What the return
There's a lot being written about it.
If you look at month to date, Apple's the biggest winner, but that hasn't been considered one of the hyperscalers around, real generative AI.
Jimmy's Alphabet's got a 52-week high today.
Meta's down 2.5%, right? They reorganized their AI unit. They announced that last week again. Microsoft hasn't traded well. Amazon hasn't traded very well.
I don't know that fundamentally it's because there's this overwhelming concern as it relates to AI. There's a lot being written about There's a lot being written about CapEx overspend, and guess what? In reality, we're not going to know whether that is actually true until the coming quarters. It's just going to be something that is an after the fact. No one is going to be able to really see if these companies are overspending in the moment. They're not sitting in the headquarters of these companies. So the possibility does exist. I'm not dismissing that. I think more than anything else, the reason why you're seeing Meta and Microsoft and some of the names you're mentioning that are underperforming recently is because capital is going away from there. It's going into things like the Eco-8 S&P.
Yeah, well, Bank of America
it's going into other areas of the market.
The mega cap run may be close to being done because of all that.
But it's not. I don't know that the fundamentals are supporting what you're suggesting. It's not like money's running away because you're seeing a deterioration in the fundamentals. You absolutely can see that over the coming quarters. I'm not calling into question that premise, but the reality of that has not happened to date.
They don't suggest that the run may be close to done, in quotes, because of declining fundamentals. They simply look at what other people on the desk have looked at.
If it's repositioning, fine. I would acknowledge that. That's fine. I have no problem if you say it's repositioning. But let's not attribute it to some change in the fundamentals, because in the most recent earnings, that wasn't represented, and you still have NVIDIA reporting this week, and they're on pace for $200 billion in revenue in fiscal year 26.
And every indication is that's intact. That's intact. I mean, I'll make this quick, Steve. Last quarter we had that, $5 billion write-off on China chips from NVIDIA. How much of that are they going to reverse now that their export licenses are in place? It's not going to be the whole thing, but some of it's going to be there. And that's not the only reason that earnings and guidance from NVIDIA are likely to be better than expected. Now, the stock, I would argue, is cheap at about a 1.4 times peg. But just be careful. I mean, it's rallying into earnings, and one wonders. It's had a few times where it's reported great earnings and gone down afterwards.
Well, Goldman today says the near-term gains may be limited, even though you get a couple of price target bumps for NVIDIA. Weiss, what do you want to say?
Yeah, I'd say, look, first of all, analysts like to talk long-term, except comments like that, they're lagging, are sort of ridiculous. They're very short-term. Stocks have had major moves. At some point, they got to rest. Now, let's go back to Sam Altman's comments, where he said there may be a bubble here. Why would Sam say that? Sam would say that to keep money from going into competitors. I mean, valuations are lunacy, so he's right about that. But he doesn't want potential competitors to get funding. So that's part of it. Sarah Fryer straightened that out on CNBC last week, said, no, there's no bubble. It's growing extremely fast. So I'm not really concerned. I can tell you that as far as data centers go, we had a private investment in a data center site So right now they don't have a hyperscaler in there. They're in negotiations with a few of them. If they don't get it, then then I'll bring that news to you.
I know, but nobody ever partying in the bubble says there's the bubble. No one ever in the bubble raises their hand and says, you know what, the bubble's about to break. You never realize it's a bubble. Realize until after the fact.
To me, it depends where you invest. So I'm not investing in the next OpenAI at 1,000 times revenues because they just started in business and somebody gave them a $10 million research contract. That's not where we're investing. That is a bubble. A lot of those companies will go belly up, undoubtedly. And the valuations for an OpenAI will reset lower. However, I don't think the technology is a bubble. That's where I draw the distinction.
The stakes going into the print on Wednesday. Put that back up if you guys could, please. NVIDIA's up 38% in 3 months going into the print. So if you don't think that raises the stakes, okay. I think it does. We'll see. Quick.
Yeah,
I think it raises the stake as well. And I think, look, you're making an excellent point on a bubble, but you've had people who for the last 7 or 8 years have been telling you this is a bubble as the market has marched higher. You will be able, once the bubble bursts, momentum works both ways, in an uptrend and a downtrend. You will be able to take your position and adjust it accordingly when the fundamentals and the evidence represent that the bubble has bursted. And the problem is when bubbles have bursted in the past and the market rolls over, that's the point where people who were bearish all along take the other side of it and start buying on the way down. You have to have the discipline.
We're in the second inning of the AI trade. That implies that we're not even close to peak bubble, if there even is one.
And what I'm relaying to you is down.
Which part of the AI trade? That's what we're in the second inning of. We're only in the second inning of the first stage of this. We have 7 more innings, Scott, where this is going to expand to all of the other industries and sectors, and they're going to implement AI and create greater productivity, and that's why you have to see that shift.
All right, let's take a quick break. Today, WEISS, that's you.
Hey, look, we're talking about more often, but talk about execution. They've been executing brilliantly. They have credit lines. $2.5 billion was the last deal about 6 months ago or so ago. I think they'll get another one, or that will be increased. And aviation, to Jim's point about Delta and others, I just think the stock keeps moving. It's had a monster move so far, and I'm glad to be a shareholder, but I'm not ready to sell this yet.
Okay, thank you. Ulta, target to 590 from 520. Outperformed tells the advisory. Joe, you own that. And Spotify also has some new services that we're doing both at once. Ulta first, then Spotify. You own both of those.
Ulta has regained its technical momentum and its fundamental momentum as well. That's represented in the earnings. That's a recent addition to the ETF. Spotify, I've talked about this now over the last several years, been a very strong winning position for us, and rightfully so. Why? Because what they're doing fundamentally, they're raising prices and they're not losing their subscribers. They're actually increasing premium subscribers up to about 275 million in that regard right now. They're cutting back on costs, and they're doing this in a very strong way that's allowing margins to lift somewhere above 30%. So in all of the cases that we're citing here in this block, Netflix, Spotify, Ulta, what are you talking about? You're talking about companies that are executing, and you're talking about that shareholders are rewarding them for that execution, and it's represented in strong momentum.
Okay, let's get on to, you want to talk about what you think is going to be at stake for the remainder of the week and the time that we have left before we do finals with NVIDIA on Wednesday?
NVIDIA is going to be incredibly important in terms of this broadening out thesis that most people right now are trying to position around. If NVIDIA, and I agree with you in your remarks before, I think the bar is incredibly high for NVIDIA. I think the fact that it has run up so aggressively over the last 90 days really puts it in a position where they have to blow the numbers out here to see some follow-through upside. If, in fact, they don't, I think that probably benefits the broadening out thesis because other areas of the market which have been unappealing will continue to see some rebuilding in position.
Yes,
I just want to caution everybody, the last 4 quarters, NVIDIA has reported great results, but on 2 of those 4 quarters, it's gone down. The other 2, right after earnings, the other 2 haven't been spectacular responses either.
Part of the problem is the stock's done so well that
exactly,
you get the continued raising of the hurdle.
Yes, exactly.
We'll see.
And also keep in mind that reaction has not knocked the market down in its totality.
Steve Weiss, you got a final trade?
Google, it's been stealth, but it keeps moving up every day. I think it's got their stuff together.
All right. Thank you very much for that. Farmer Jim.
Lockheed Martin, look for more news coming out of the Golden Dome project.
Thank you very much. Telecom, Shan, is that you?
Yeah, telecom, media, just some opportunities in communication services, perhaps outside those big heavies.
Are you still riding that Netflix wave?
I'm pretty happy about the Netflix wave.
All right. All right. All right, 3 stars, or however many Rotten Tomatoes you get for what it's being good. Joey.
Tough to invest in traditional oil and gas right now, but you can look at the refiners. It looks to me like they're turning back up higher.
All right, I'll see you on the bell with Greenhouse.
Hey, I'm George. This is Blue Cloud Trading. Guess what? It's Monday, August 25th. It's after the close, 5:26 p.m. In this video, we're going to cover a number of things. We're going to take a look at the indices. As you can see, they were down today. We're going to take a look at some of the stocks, some of the ETFs here, like the SPY, the Qs, the Dow, the Russell 2000. We're going to take a look at 14 of the stocks and ETFs that they talked about in today's halftime report. You saw Steve Weiss, Shannon, Joe Terranova, Farmer Jim, right? Scott was back today. We've got 3 stocks here in the Mag 7 that we're going to cover. Actually, we're going to cover Google too today, which happens to be one of the stocks in my portfolio. We're going to look at some of the strongest sectors in the market, as well as some of our members' requests like Lyft, Oracle, NCLH, and WG. Let's get started. So what happened today? Markets kind of fizzled out after that big move up on Friday. You can see the drop. The Dow dropped down 0.77%. NASDAQ was kind of interesting. It gapped down. It created these bullish hammer candles that you see right there. And then, boom, it popped. But then it, again, dropped. And then actually closed under Friday's closing price, down 0.22%. So not a big drop, really. The S&P 500 was down 0.43. You can see that it gapped down in the morning, moved up, and then dropped, right? Kept on dropping, down 0.43%. Russell 2000 gapped down and just continued to drop. And it was down 1.05%. It was down the most. Let's take a look at the heat map. This is going to show us the individual stocks in the S&P 500. How did they do? What sectors were strongest? Well, we can see here consumer defensive, right? A lot of red. Okay, not too many stocks did well there. The communication services were pretty good. Google was up, Netflix was up, Meta down just slightly, 0.2%. NVIDIA in the semiconductor space was up 1.02%. They're coming out with their earnings report on Wednesday, so that's going to be an interesting day to watch out for. Healthcare stocks did not do so well today. You can see that a lot of red there. Utilities didn't do well. Industrials were mostly red. And if we look here at the at Tesla was up 1.94%. If we look at the sectors, let's do that. So you can see which ones were actually strong today and which ones weren't. It was just communication services that was actually up 0.49%. Healthcare was down the most, 1.57%. Consumer defensive, utilities, industrials, and financials. But if you look at the 1 week performance here, overall, the market's been pretty strong. And if we go back, right, if we actually go back, let me go back to the home screen here. I want to show you guys something else that we should be paying attention to. And that is the percentage of stocks, right, that are advancing versus declining. Now, today, obviously, about 66.8% were declining. But if you look to see what's going on, 82.1% of stocks are experiencing new highs right now. See all that green right there? Only 17.9% are experiencing new lows. About 60% are above the 50-day moving average. Above, 53.4% are above the 200. So, yeah, it's looking overall not too terrible. Okay, let's take a look at the index ETFs first here. We're using TC2000. All right. If you guys like the software that I use, you've probably seen some other videos that I've done. You can get access to this. You can get a $25 coupon for this software through my homepage here, Blue Cloud Trading. You just come over here. Next to this link, you'll see and 9 more links. Click on that. Scroll down. There is the coupon, $25 coupon for the TC2000 software. All right, click on that. It will bring you to a page here. You enter your email address. All right, and you can download the software. So, and then you can choose which of the 3 different services they have that you might be interested in. But it's a really good way to manage your portfolio. If you have specific stocks you want to look up, it's really easy. All you have to do is just start typing in. If I wanted to look at Apple, I just type in Apple. You can see it popped up right there. There's the ticker symbol. There it is. Boom. You click on it. There it is. You can see how fast it is too. Some charting platforms take forever to load. This one here is very quick, as you can see. And you can scroll through the stocks very quickly, like, as you can see. Look at that. That's crazy. Anyway, SPY, just by hitting the space bar. SPY is the S&P 500, and yes, it did drop 0.44% today. However, as you can see, we're using the Ichimoku indicator, one of my favorite indicators, that helps us to identify the trend. And you can see this strong uptrend that we're in. How do we identify it using this indicator? All we need to do really is look at the price, where it is in relation to the moving averages. If price is above the Tenkan-sen, the Kijun-sen, we're bullish. Price also needs to be above the Ichimoku cloud, which is a unique indicator, right? Because how many, indicators do you know actually have a cloud in them? Very visual, at a glance, which is what Ichimoku stands for. You can tell that price is in a bullish state, right? If it's dropping and it's bearish, we're gonna, like over here, when price gets under the cloud, things never really work out so well for a little bit until we break through. And you can see here, since we broke through the cloud right there, we're already up 10.5%. Anyway, daily chart looks good. Weekly chart still looks good, right? We've got both time frames confirming this strong uptrend. We just had a down day of 0.44. Nothing to get too riled up about, in my opinion. Here's the QQQ ETF down just slightly, 0.29%, and still in between the two moving averages. That's an equilibrium zone. I think that's still very bullish. If you look at the weekly chart, all right, we're holding up above all the moving averages, and we're still above the cloud. The other thing I should mention is there's another element here, the Chiku span. That's the white line that you see in the background. That's the closing price projected 26 periods ago. If you're looking at a weekly chart, that white line is looking out back 26 weeks. And we can see where price is in relation to the price 26 weeks ago, right? So there's the price 26 weeks ago. If you see that above that candle, that's very bullish. When, the Chiku span gets under, all right, that's a bearish signal right there. And you can see how the price it dropped during that period of time. DIA is the Dow Jones. That's also looking pretty strong here on the weekly chart. Okay, above the support level here, the 451.34. Let's look at the daily chart. Okay, yes, we had a down day, down 0.78%. It did create a bearish harami. Now, it's super close to the equilibrium zone. It's super close to the support levels. I don't think this is going to materialize into anything. All right. If you look down below here, the ADX is still moving up. That's the white line that represents momentum. We still have the green line above the red line here for the directional movement index. We got a setting of we have a setting of 9 for both the positive DI and negative DI there. So this is all looking pretty strong still. Russell 2000, all right, also popped on Friday. You can see we broke through these levels, right? We were waiting for these levels to be broken. That happened on Friday. I didn't do a video on Friday. Had a day off there. But, yeah, it's pulled back slightly, down 1.05% here. It's still holding up above these support levels. That's the key thing. Here it is on the weekly chart. All right, the next level of resistance will be around 244.98, and that's about 5.4% away from where we currently are. So, what about the VIX? The VIX represents market volatility and fear in the markets. That was actually up 4.01. If we look at the daily chart here on the VIX, even though it was a negative candle, a red candle, it did gap up, and then it just dropped slightly. All right, so there's not a big spike here in the VIX. It was only up 4.01. We're at a level of 14.79, which is conducive to still a strong trending uptrend in the market. We are in a bull market. That's how Ichimoku helps us to identify bull markets. If price on the SPY and the Qs and the Dow and the Russell are all above the cloud, guess what? We're in a bull market, especially if they're on both the weekly, up above the weekly and the daily time frame. It doesn't really matter. There are negative news out there for sure, but the market is not really paying attention. Okay, it's just going. It's going, and there is demand, and people are still buying. Anyway, let's keep going here. And so there were 14, there were more than that, but I'm going to cover 14 stocks and ETFs talked about on the halftime report in those clips that you just saw. And I highlighted the strongest ones up here with a little blue flag. Okay, so we've got RSP, WIN, Dow. Let's take a look at those individually. Here's Invesco, S&P 500 equal weight ETF, where it takes the S&P 500 and gives it an equal weight on every one of the 500 stocks. And this one here, it was down 0.77%, but similar to the S&P 500, the SPY, as you can see, it's still in a strong uptrend here. Same thing with the weekly, right? By the way, one other thing you can keep an eye on is this cloud. Notice how it actually projects into the future. That's an interesting, unique feature about the cloud. When the Senko span A, the light colored line, is above the purple one, that's bullish. Okay, when it's under, it's usually bearish. You can see that back over here where the price dropped. Okay, how about Wynn Resorts? I like this one too. Check this out. It popped 3.54% today. That's in the resorts and casinos. Where is it in relation to the prior high? Let's take a look at that. It looks like it stalled right at that level. Do you see this high right here? Let's get that exact number. It's 117.86. Let's type that in there. Okay. And so now we've got a level that we need to break through. And guess what? We did. 118.36 is where we closed. We closed slightly above, and on very low volume. So I don't know how conclusive that is. All right. I wouldn't put too much bearing on that breakout. Ideally, you want to see a big candle breaking through. Okay. If it's going to break, you want it to be a bigger candle, a bullish candle, and you want the volume to be surpassing the 50-day moving average down here that you see in the volume levels. All right. Like you did over here. See this green candle? If you go straight up, we had this reversal candle after that drop, and look what it led to, that nice expansion, right? So that's what we're looking for. But nonetheless, on the weekly chart, it's in the beginning stages. This candle is still forming. I thought this was a daily chart for a moment, but it's actually the weekly chart that I'm looking at. So this candle could certainly continue moving. It's a dynamic candle. We won't know exactly what this candle looks like until Friday, really. All right, so Wednesday, it's going to be a big day with NVIDIA coming out, and I think that's going to help to push all stocks either up or down. So it's amazing how much impact one stock can have on the entire market. Here it is on the daily chart. It broke through that 117.86. So I like what I'm seeing overall. We're not hitting all-time highs here with Wynn, but it's moving up, and it looks okay. On the daily chart, actually, we do have that. So if we look down below, remember I was just saying how it's important to look for that volume. Actually, we did get that on the daily chart. All right, so we have a higher volume right there. We've got the ADX moving up. We've got the positive DI moving up. That's good. Negative DI moving down. That's also good. And if you go straight up, you can see breaking through that 117.86. I like Wynn. All right. How about Delta Airlines? That was Jim Lebenthal's final trade back in May, end of July. And this one here, here's the weekly chart. It got above the cloud back here on August 15th on the weekly. All the elements were looking good except for the Chiku span, which is still not above the candle, right? So 26 periods ago, that white line. The cloud itself is still bearish. Let's look at the daily. Daily looks more bullish because it's going to be a little faster than the weekly, obviously. More things happen faster on the daily. So you don't have confluence, you don't have confirmation on the weekly, but it is certainly obviously in a uptrend. We're experiencing higher high here from the prior one, higher low here from the prior low. All right, we're in an uptrend. Okay, it's simple as that. Visually, we can see it, and that's all that matters. FTAI Aviation Limited. Here it is in the weekly chart. Now, this one is also above the Ichimoku cloud, above the Tenkan Kijun-sen. Chiku span is above price, but on the weekly chart, the cloud itself is still, it's kind of neutral. It's just going flat. You can see that right there. It's not moving up like it was over here. So I don't know if this is going to be a short-lived little move. We've got these highs right here that it needs to clear as well. So that's interesting. Here's the daily chart. Okay, so you can see that level right there that needs to be taken out, in my opinion. ULTA, but overall it's bullish. Ulta Beauty happens to be one of the stocks they talked about, and it happens to be in my portfolio. I added this one back on August 13th. It's moved up slightly, and it's above the Tenkan-sen and Kijun-sen. Here it is on the weekly chart, still looking pretty bullish. Google is another one that I'm still holding on to. This one I added here on July 15th. Let's look at the daily chart on that one. So it broke through these prior highs here back on July 15th, and you can see that it's now breaking through the 207.05 today. That's really important. That's a blue line, which means it's a weekly level. So let's look at that weekly level. It's right here. Do you see that high right there? So we took that out. What does that mean? We're experiencing all-time highs with Google today. And actually it happened on Friday too. You can see that the price actually broke that 207.50 on Friday. I'm sorry, last week. It was above that weekly level. But this weekly, this candle looks still very strong. Let me look at the daily chart. Yeah, on the daily, this was Friday, okay, August 22nd, still resisting that 207.05. Today, on a down day, Google was up 1.16%. You should also pay attention to how stocks perform on down days. Okay, that's how you're going to find the strongest stocks, basically, the ones that have the most potential. I'm still holding on this position. This one here, since the entry point, which was when I got above that level. So I'm up a little over 14% on that one. By the way, this weekend, I also did a video of the complete portfolio, all right, the Blue Cloud portfolio, where I go over all of the stocks that are in the portfolio. How do you get access to that? Basically, just come to Blue Cloud Trading, click on the link at the top here, the join button. Click on that. It will bring you to this page. This will pop up. You can become a Blue Cloud supporter, okay, a Blue Cloud trader, or a Blue Cloud Legend level member. You'll be able to see those videos starting at the Blue Cloud trader level status first, and then if you also want it, so you can see that exclusive member only videos, and then Blue Cloud Legend level member, you'll get daily trade updates whenever I place each day. You know, if I'm entering or exiting out of positions, you'll find out which positions I added, which positions I closed out of. Okay, give you a quick little summary of the market. I also give about more stock ideas from the Blue Cloud scanner, because I do have a proprietary scanner that I use, and I share the results of that with members that are Legend level members every day. And then where do you find those videos? If you scroll down, you'll see them right here. So there's the one that I did over the weekend. Every weekend I do a new one, and they're usually anywhere between 48 minutes to an hour or so. Okay, let's get back. So IXP looking strong here. This is Shannon's final trade today, August 25th. Daily chart. Here's the weekly. This is the global telecommunications sector. So if you're looking for a little bit more diversification in the ETF that is global, not just US, this is not a bad place to be. INTC is Intel. They talked about Intel quite a bit in the beginning of the show. And now that the government, US government, isn't getting involved in taking stakes or trying to take stakes into Intel and considering doing it to other companies too, how is it performing? It was down 1.01%. On the weekly chart, we're still inside the Ichimoku cloud. We're still under the 200-day moving average. Here it is in the daily. Okay, it's stalling at this area here. And by the way, there's a couple of negative things that I'm seeing here technically on the daily chart that I should mention. So there's a shooting star. Okay, that's a negative candle that led to price dropping. It found support down in these levels here and then started moving back up. But guess what? We have a dark cloud cover candle pattern here. These two candles. And I'll show you guys what that looks like. So all we need to do is look at our candle pattern reference sheet. Okay, we got bullish, neutral, and bearish. And let's go to double candle patterns. There's the dark cloud cover. After a move up, what you'll notice here is that price. Okay, here's the bullish day from Friday, for example. All right, hypothetically. And here we are today, gapping up, but then dropping. So we actually moved up in the early part of the day, but then dropped. And the price closed within the body of the prior day. depending if you're looking at a daily or a weekly chart. So that is not. So what does that mean exactly? Does it mean that price is definitely going to drop? It does not. It just means that there's a higher probability, right? There's no guarantees in the market. It doesn't, even Ichimoku doesn't guarantee anything. All it does is give us higher probability trades so that you have a little bit of an edge in the market when you're placing your trades. So I would not be adding a position here based on that, obviously, just looking at that. By the way, that candle pattern reference sheet, guys, someone was asking, also one of our members was asking about that. Here's how you can find it. Just go to my X page, at Blue Cloud Trader, okay, on Twitter. And this is where you'll find it. So it's not under the posts section. It's under highlights. Go to highlights tab and just scroll down a bit and you will find, there it is. And there's the cheat sheet for the patterns cheat sheet too. So if you want to check out that, that's interesting too. And then I think from here you can download it for free. So that's at Blue Cloud Trader. And you can find that link also. If you go to 9 more links, scroll down, there it is. Okay, let's get back. Okay, so INTC, not really recommending that here. And you can see it's inside the cloud here in the weekly anyway. CLF. Now, the rest of these stocks, there's something wrong technically with them. Well, there was something wrong with Intel too, but the rest of the stocks that they talked about, we're going to look at those too. Like Cleveland Cliffs, for example, which is a steel, basic materials sector. This one here, although it is showing some strength here on the weekly chart recently, because we did have a positive crossover, the faster moving average, the 9 period, the Tenkan-sen, crossed above the Kijun-sen. All right, so this is in the early stages of potentially turning into something. We also broke through here this long trend line that you see right there. And maybe it bottomed out, but not necessarily, because the cloud seems to be finding, it seems to be finding resistance at the cloud, which is a normal thing, right? It tends to stop dead in its tracks usually, right? And then sometimes we'll break in, and if it does, then expect it to get to the next level of resistance, which would be the upper part of the cloud. And then of course you get the 200-day right above there looming. That's the dotted yellow line. So there's a lot of resistance here. I would not be recommending this one. And look at the daily chart too. Daily chart, we've got the faster moving averages under the slower one. So that's bearish. We had a, the trend line, the moving average is going negative right there. But price is above the cloud and it's above the 200 on the daily. So there's a lot of mixed signals here. And when you got mixed signals, you have a lower probability trade there. Why take that chance unless, you like to gamble a little bit? I like higher probability trades. Spotify, SPOT is the ticker symbol for this one. Here it is on the daily chart. It's inside the Ichimoku cloud, stalling, right? Inside the cloud on the daily. On the weekly chart, it's under the Tenkan-sen currently, and it closed under it on Friday as well. So it's not a buy signal there. LMT is Lockheed Martin. That's under the Ichimoku cloud, so I'd pass on that one. Okay, it's on the weekly there, and on the daily chart, it's also under the cloud. No. VLO, Valero Energy, today was up 1.20%, and that was Joe Terranova's final trade. Okay, now, what's the problem with this one? Well, according to the Ichimoku cloud, and this is based on rules, it's a rules-based system, right? Senkospan A is still under the Senkospan B, and the Chikuspan, the white line, is still under price right there. So those are the two negative things on the Ichimoku. Now it is showing strength, right? These last multiple days it broke through the cloud. But what about the weekly? Inside the cloud still. So you don't have both time frames confirming anything here. PSX is also inside the cloud on the weekly. And on the daily, it did break through. MPC is Marathon Petroleum. That's also inside the cloud on the daily and inside on the weekly. So if price is inside the cloud or under the cloud, usually not a good idea to be considering it as a trade. Let's take a look at some of these Mag 7 stocks like Tesla. On the weekly chart, we're still inside the Ichimoku cloud. All right, it's been stuck in this consolidation stage. We're talking about since May. It's been a while. And if we look at the daily chart, We did break that trend line there. It's showing some strength here on the daily. Okay, but on the weekly start, we've got resistance here. I would not be adding positions here. Apple, inside the cloud still. All right. Also broke that trend line, but it's fizzling out after that breakout. Take a look at the volume down below. There's some evidence right here. If you're looking for an evidence-based approach, which makes sense when you're trading, when the volume is declining, that means that there's not enough buyers to push the price up, right? There's less and less interest, or less demand, therefore price drops. Demand supply. Here's Meta. Meta down 0.20%, holding up above 747.90 on the weekly. But it's above the cloud. It's above everything here. The Tenkan Kijun-sen. What about the daily chart? It's under the Tenkan still. It's got some potential to pop back up above there soon. We'll see if that happens. But right now, I would be sitting on my hands on that one. Next is the sectors. I'm just going to show you guys the strongest ones. I've got them highlighted here with a blue flag at the top for today. XLB, which is the materials ETF, looks good on the daily, looks good on the weekly. Okay. SLV on the weekly, silver, looks good. On the daily, you can see the Tenkan is above Kijun-sen. It was down 0.91%. It's kind of consolidating, but overall, the technicals still look good. GDXJ still looks good, even though it's down 0.35%, strong on the daily and on the weekly. Copper miners ETF, COPX, looks good on the weekly and on the daily. Okay. GDX. Do you see the advantage, folks, of using Ichimoku? How quickly we can assess all the stocks and ETFs? Seconds. It doesn't really take that long. You really shouldn't be spending too much time when you're trying to pick stocks from a technical perspective. You can certainly spend more time on the fundamentals if you want to, but I would never pick stocks just purely on fundamentals. You will get burned badly. Trust me. Always take a look at the fundamentals, but also take a look at the technicals for confirmation before entering a position, just to make sure that you're on the right side of the trade. GDX looking good on the daily and on the weekly. XLC was up 0.16%. That looks still looks very strong, up on the weekly and on the daily chart. Okay. SMH semiconductor ETF, that's also good. Good above the daily, above the weekly, looking strong. XHB home builders on Friday, check it out. And this was Friday right there. Hold on, daily chart. This was Friday's daily candle that broke above this little consolidation right here. Okay, now it came back under, but it's still holding above the Tenkan and the Kijun-sen, the 9 period and the 26 period. Why do these flatten out? Why do they look different than most moving averages? It's because they're calculated by taking the high, the low of the candle, of each candle, dividing that by 2. So it's the midpoint. All right. In this case, if you took the high and the low there, you took the midpoint, and then it takes that from every single candle. The last in the green line, it's the last 9 periods. With the red line, it's the last 26. The purple line down here is based on the last 52, the midpoint of the last 52 periods, but it's projected 26 periods into the future. Very unique. And then how do they figure out the Senko span A? This part, all they do really essentially, the formula is they take the midpoint of the moving averages, the Tenkan, the 9 and the 26. It's the midpoint right there, projected 26 periods into the future, and that helps us, right? And again, this here is the Chikou span, the closing price 26 periods ago. That's it. I know it looks more complicated than it, but it's really not. Once you understand all this stuff, at first it can be a little bit intimidating when you look at all these lines. But it's a pretty simple way to quickly assess the technicals. IJJ, mid-cap 400 looks great. On Friday, check this out. Popped through that 129.17. We've been waiting for that for a bit now. The last time we were above it was back in February. Yeah, February 2025. But it was down 0.66% today. And here's a weekly chart for you. XLF on the weekly, still holding up above 52.63 on the daily chart also. But it was down 0.58. XLY consumer discretionary up above the moving averages in the cloud, but it's down 0.20% today. Here it is on the weekly chart. Strong. All right, let's look at the members only stocks. Lyft. We got a blue flag on this one. Why? Because price is above the Tenkinson, the Kijinsen. The cloud has turned bullish. Okay, there's been a little bit of crisscrossing happening here, but it overall looks bullish. Now, it is stalling at the 1752 level. You can see that right there. That's based on that prior candle from May 16th. Ideally, you'd want to see it break through that level. But if you're holding this, you could certainly be holding this position, waiting to see what happens. That's a weekly level that we're looking at. Okay, let's look at the daily chart. So here it is on the daily, and you can see once again we've got the single span A crossing above the single span B, so that's the cloud's turning bullish, the future cloud. We're coming back again to that level right there, that 1752. We did get a shooting star, so that's a little bit concerning. You can certainly pull back, and if it does, how far away is it? It's about 8.3% away from the moving averages here. So you could expect a little bit of a drop if this thing starts to get under the low of that candle, which is, let's find out, $17. So if it gets under 17, it could certainly continue to drop before it finds a little bit of support down here. So, but overall, I like the daily and the weekly because we're also emerging out of this very, very long and extended drop. I mean, the highs of Lyft go back to $89.26 back in 2019. Okay. And I mean, since that point, I mean, the stock has dropped 80.87%. The price of sales is pretty reasonable at 1.08. It's pretty good. The sales growth is good, 17.38%. $7.2 billion company. Operating cash flows are positive, $1 billion there. Next earnings are on November 5th. So it's not like there's an earnings announcement that's expected anytime soon that could lead to this thing dropping unexpectedly, So I think there's some potential with this one. It also got above this week here, above the 200, the declining 200-day. That's that dotted yellow line. So that looks pretty good. Okay, let's look at Oracle. Let's start with the weekly chart. On the weekly chart, it's starting to show some weakness. So we had multiple reversal candles. We had that almost like a shooting star there. We had another shooting star. We had a doji. And then it dropped, found support at the Tenkinson, and now closed down 0.41% under the Tenkinson. It could be short-lived, but you can also notice here that the ADX, which was moving up steadily, right, as the price was moving up, is now declining, which means momentum is coming out. Volume is drying up here in Oracle. On the weekly chart, what about the daily? There it is on the daily chart. So you can see that happening here, but it's been it looks like these last 4 days though. Okay, since this bullish candle here, price has moved up slightly. All right, these last 4 days, and it's going to retest these moving averages to maybe pop through them. We'll see what happens with Oracle. NCLH, which is Norwegian Cruise Line Holdings. This one is, we've got a bearish crossover that took place back here. The faster moving average, 9, crossed under the red line, the 26, so that's bearish. Price stayed under the moving averages here. You can see how it kept on holding under that level. On Friday, with the bullish behavior of the markets, you can see we burst through it all, and then today was down 1.64, so it stalled at that Kijinsen. The directional movement index looks good. Positive DI is above negative DI. ADX is moving up. So that's the daily chart. Let's look at the weekly. Here it is on the weekly. So we can see just not a lot of movement here. But last week on Friday, on August 22nd, we did close above the Ichimoku cloud on higher volume. So this candle is still forming. I feel like it's a higher probability that we're going to see, because of the directional movement index, because of where the weekly charts look, what the weekly charts look like, with that future cloud turning bullish. I think there's a higher probability that price will continue moving up. So I would not be, personally, I wouldn't be exiting here because this is still has a lot of potential. We're still holding up above that 200-day moving average as well. All right, let's look at NWG, NatWest Group. That's the Banks Global Financial Services. Okay, so this one here broke through the Ichimoku cloud, came back under temporarily. Then over here, once it broke above, it's up over 9.58% on the daily chart. Still looking very bullish on the daily. Okay, so I like the daily chart. We're still above. I should have given it a blue flag because it is above the Ichimoku cloud, above the moving averages here, and on the weekly chart also. I had a position in this back here in May, a small 7.3% profit. Okay, so that's going to do it for this video, guys. Hope you enjoyed it. Hope you learned a few things. I do videos typically almost every day during the week, and the members only video on the weekends. Stick around if you want to find out more details on how to become a member. You're coming to this channel for the first time, you may not have subscribed yet, which is kind of crazy. Can't believe that you haven't subscribed. You know, this is free. Hit the subscribe button. I'll be popping up in your subscriptions in the future. If you hit the notification bell as well, you will be notified. So where's the notification bell? Well, once you hit the subscribe button, okay, it will pop up the notification bell, and then you can select that. Another interesting that you'll notice is that you get this little plus button right next to the subscribe. That happens after you've subscribed. Why? Because they're giving you an option now to join. All right, and if you click on subscribe it plus, once again, another thing pops up, and this is the membership. This is where you can support the channel. Okay, you can either become a Blue Cloud supporter, a Blue Cloud trader, where you get access to exclusive member-only videos here under Blue Cloud Trader. Under Blue Cloud Legend level membership, you get those member videos. You can get access to day trading videos as well as the daily trade updates that I post. Now it says here under the community tab, it's not actually under the community tab. It will pop up in this next thing here. Boom. Once you've become a member, you'll see a new tab pop up called membership. You click on that, and that's where you'll find those daily posts on the trades that I've placed. What do I cover in this members only video? Like this one here, for example, that I posted just 21 hours ago on August 8th. I go over the, whoops, hold on one second, let me go back. You will see exclusive member only video. Okay, weekend update on the trades I placed throughout the week, plus new stock ideas for the upcoming week that are setting up. Okay, and all you need to do is just scroll down. You can see you'll have access to older ones as well. All right, so you get a more insight about my trading strategies and you know, the stocks that I'm actually holding, plus those 20 new stock ideas. All right, something to consider.